need to love the team. At the end of the day, those are all excuses to really get to know you.
This is one of the hardest things for founders to develop sometimes is what we call like a nose for A+ quality talent. I mean, one of the most important inputs to a startup is just how high quality of talent you can hire.
But at the end of the day, founders that are also looking for different points of view. They want to be challenged. The founder needs to draw people towards his or her vision.
Hi, everyone, and welcome back to another episode of Fundraising School. I'm Andres Bilbao, and in this opportunity, I have the joy and pleasure to introduce Mercedes and Carlo. Mercedes Bent, who's a partner at Lightspeed Ventures, and Carlo Dapuzzo, who's a partner at Monashees. They're both investors and advocates for growth and innovation in the region and personal friends. In today's episode, we'll learn how to build a high-quality data room, what startup metrics are key to top investors, how to strike a balance between growth and profitability, especially in today's fundraising environment, and how to leverage relationships with your current investors, as well as when to approach future potential partners. If you're looking to navigate the fundraising world in a pre-Series A, Series A or B with confidence and clarity, this episode is a must listen. I shouldn't say this stuff out loud, but I'm gonna say it. Like, if Carlo ever offers me money, I have to take it. Like, I have to. And you shouldn't say that because the leveraging, like the negotiation leverage is like, it sucks, right? But it so happens that I've seen Carlo. I remember this one time where Rappi was going like well, but we were running out of cash. And they wired us $1 million at a small discount so we can go and raise chill. And that kind of like saved our asses completely. And you would think like, yeah, they're like cool people, and Carlos like quite nice. But then he did that again with another of the companies that we were creating. And then he did that again with a company that I did not like at all and had issues with like the founder. So they do it all the time. And there's this one company that I'm not an investor in, but I'm close with the founder. And whenever things are not going great, they call him San Carlo, right? So this is why it's Enrique from Toul, right? Calls you San Carlo. So that's why I was very excited to invite Carlo here, and hopefully Mercedes joined also. But a little bit of background on Mercedes. She's a partner from Lightspeed Ventures. Both of them, these folks are Stanford MBAs, and Mercedes has done a whole bunch of investments in Latin America. And I know that we're talking a lot about Latin America because in this session, I wanted to focus a little bit more on that, because all the people that are coming here are folks that are very bullish in the region. Carlo has been doing this stuff for like 19 years. So there was nothing, and he was investing in LATAM, right? And Mercedes is candidly, Mercedes is the reason that Lightspeed invests in South America. So it's quite important for us that we do that. And in the case of Mercedes, she's also very passionate about education, and she's been very helpful. And we've done a couple of investments together, and I just love having them on board. Carlo, I would love to start with you and maybe provide a little bit of an overview of the investment philosophy that you have and Monashees has. It's quite particular. Whenever you go to the office, it feels a little bit different.
Thanks. Hey, Andres, Mercedes, everyone. Thanks, Andres, for having us. It's great to be here. Thanks for the kind words in the beginning here. Yeah, so to kick it off, as you asked about Monashees' kind of investment philosophy, that essentially hasn't really changed over the years. We're pretty much focused at the early stages, Series A being the sweet spot once you have product market fit there. But we also do a lot of seed investments. And those are not, we don't see those are kind of buying options for, the Series A to preempt them, but, we see them as just another Series A investment in terms of our investment of time, dedication. So the bar is high. And I would say, even though you don't have product market fit there, we need to love the team, right? I think that's the most important factor there. We need to be in love with the team, which usually has to do with two factors. One of ideally both, but one of them already checks, which is the founders are already proven, successful, exit, etc., or they've been trained in a Rappi, one of these high growth companies, success stories, seeing the thing being built from the inside. So we love those. And obviously tackling important problems in very large markets, check. Then we can, not require the product market fit and do investments earlier than DA. In terms of sector focus, we're pretty much agnostic. We look at basically everything tech related in Latin America, not only based in Latin America, but global opportunities, as long as there is kind of a Latin American angle. Founders are Latin Americans, or Brazil or Mexico is a key market for the team. Having said that, historically, we've invested a lot of our energy and capital into fintech, marketplaces, SaaS/enterprise, health, and education. Those are the key spaces that we spend most of our times. And on a higher level, I mean, this is so hard so hard to pull off. The odds are always kind of stacked against us. So we don't take this lightly. When we partner with founders, we always think about human alignments. At the end of the day, you can run the numbers, projections, spreadsheets, but it's all about being good partners to great founders. That's how we see it, and making sure, there's alignment in terms of values. So we do a kind of a test when we're about to partner up with a team, which is, suppose you wake up in the morning, you see in your calendar, you have a board meeting. You have to feel good about it, imagining that future. Not necessarily that you have fun or it's the founder, is matches your style, but that, you have honest conversations. The founders will seek for feedback, even though they have strong convictions. And you get this feeling that you'll be in a journey of learning, of building something together. So that's kind of the optimus test for us. So that's kind of trying to be concise. I could go on and on here just to give you a sense for our investment philosophy.
Oh, but that's very valuable, and I want to switch to Mercedes. Mercedes, thank you very much for joining us. I'm personally super grateful for the time you spend in LATAM and all the push that you do there. I don't know if you folks realize, but it's like quite hard. Like Mercedes literally has to go like upstream and pitch everyone so that we get investments down here. And I wanted to ask you those questions. Like, first off, if you could educate the folks a little bit on Lightspeed and its philosophy, and then on you in LATAM, like why are you up for that? And we're super grateful, but just to provide that color would be wonderful.
Yeah, great to be here. Thank you so much for the invitation. And Lightspeed, so quick background on us. We've been around for about 25 years. We are investing out of 29 billion right now across all of our geographies. We're a large multi-stage fund. Our last fundraise was about a 7 billion fund, which was 2 billion for early stage, 5 billion for kind of growth stage. And we'll probably do about the same size again to announce next year. And we do, even though it's large funds, we do kind of all sizes. We do check sizes as small as 1 million. That actually was our smallest investment into a LATAM company. And we go up to over 100 million or so. The largest investment we did in a LATAM company so far was about 30 million. And so we've been investing in the region since 2021. That was the first year that the money actually went out. We've been looking in the region for quite a bit longer than that. And we started out really investing in fintech. As Carlos said, fintech, I think it's one of the sectors that LATAM just really punches far above his weight for. If you look at the number of companies and exits and kind of public, companies that have gone out. We also originally looked at marketplaces and commerce, but have since, with the market pullback, retrenched a little bit more to just looking at fintech. We just feel like there's a ton of opportunity there. So that's a little about us and our background. And from an investment philosophy perspective, we're always looking for, we have like very specific things that we look for in terms of a founder and the kind of intensity levels they bring, the learning resources that they have, the kind of responsiveness, the depth of their answers, the size of their vision. And then we also have things that we look for in terms of the market, the tailwinds behind it, the currents that are driving it, and then the product velocity in terms of just how fast people are shipping and how quickly they're able to kind of iterate and move on to find product market fit and sustain and defend the product market fit. There's a whole bunch of KPIs that go into that as well, but so those are some of the main things that we look for.
Yeah, that's super interesting and quite specific. So it sounds like you're looking at speed, and
Yeah,
grow,
kind of like what Rapi's good at.
Yeah, I think that's actually quite valuable. And I wanted to touch upon this with both of you, because right now I get a lot of founders discussing this sort of like trade-off between growth slash speed and profitability. And I'd love to understand your take on that. Maybe start with you, Mercedes, and then move on to Carlo. How do you look at a company now in regards to those two metrics, and how has that changed over the last, I don't know, 5 years?
I think of it as you have to be high growth and high quality. Quality often in today's environment means profitability. It doesn't mean you're a profitable company, but that you have signs of being able to have the early beginnings of creating a profitable machine one day. If your unit economics don't make sense at all in the kind of like post product market fit phase, then the chance that they eventually make sense just gets lower and lower. And there is a lot of reticence for people to be funding negative contribution margin businesses in Latin America right now, in really anywhere. But I think there's a question about, it's a very different situation to say, I have a business that has 50% gross margins that can get up to 80% gross margins, and this is the bridge and the path of how I get there, versus I have a business that is negative, 14 or 30% contribution margins, and I'm eventually going to get it to 20, 30, 50%. Those are just very different conversations. So when I say default quality business, it's about the ability to have a repeatable, scalable way to go to market that has evidence and plausible evidence of getting to a profitable model one day.
Well, how about you, Carlos? How do you feel about growth and
Yeah,
profitability in the current environment?
yeah, very similarly. I think Mercedes summarized it really well. I mean, obviously, we are concerned, worried with unit economics. Not necessarily they need to be figured out at that stage we're talking about post Series A, but there needs to be a kind of a clear path to get there. That you don't need, crazy volumes. You don't need a fully funded plan that is in the order of billions of dollars. I don't think this type of businesses are getting funded at the Series A stage today anymore, like Rappi was in 2016, for instance. But I think still kind of front and center is what she referred to as the quality of the product market fit, right? And you get a sense for that by looking at the cohorts and seeing retention, not only logo retention, but net dollar retention, how users are sticking around. I think this is where we try to spend the most of our time to really understand if the product market fit is really strong and sustainable. I think that hasn't really changed.
Yeah, that's awesome. And I did want to tease out that point because Mercedes highlighted it as a must-have, and you highlighted it through product market fit. And then we spend a bunch of time explaining the economics. And I think that's when founders get confused. So I want to say again, you have to grow really fucking fast, period. Like you have to do that. And then make sure that you have the economic, but you have to grow. There's no, they won't have a trade-off as investors on that regard. And that's quite relevant to your fundraising story. I want to switch gears a little bit because the whole idea of bringing you guys also here, given that you have this ton of experience, is to talk a little bit about the process. And I want to start off with you, Mercedes. I remember once we were having this discussion and you mentioned this company whose data room you really liked. It's like, yeah, I really like this data room. They're like very tight. And me having done this a whole bunch of years, I had no clue like what the heck is like a good data room versus a shitty one. And I'd love for both of you to tackle that. And starting with you, Mercedes, what do you like to see in a data room that makes it like high quality?
Let's say it's for a Series A,
Yeah.
because seed I think is a little hard to say. For a Series A or a Series B, I want the data room to walk me through a couple of things. One is the financials, the historical financials on a monthly basis, as well as a forecast of the future financials. I like them to be together in one sheet. People have their preferences, putting them in different ones. And then it's in terms of like, I really want to be able to understand the drivers of the business, not just like what is the output. Like people give us output sometimes that are just hard coded of like, here was my numbers. And it's like, well, I can't really tell what's happening in the business. That can be more okay for the past numbers, but especially for the future numbers, the forecast, I want to understand how you're driving it. Because ultimately, what my investment decision comes down to is, do I believe the drivers that are the future growth are plausible? That's one of the things that comes down to. But do they make sense? And I want to test those assumptions. So that's one thing. That's like kind of a, that a lot of times is presented in a P&L form. It looks like a calendar statement. The other way I really, really love to see financials is in a cohorted manner. So take the, May, June, August cohorts and extending them forward. And so historical all-time cohorts around retention, both like the logo retention, the revenue retention, as well as any other key metrics that are important, maybe your engagement activity or something like that. So kind of like financials, cohorts, the financials should include the gross margins. Then there's some kind of like secondary level, metrics like LTV CAC. Like, okay, so how are we actually calculating the lifetime value? What's the cost of acquisition? Your first two statements that I just talked about will probably have almost everything in there, but there's some more. And then there's like cash flow. Like the ideally in the financials also is the cash flow of the business. But that's like the main kind of high level important stuff. After that, it goes into other things like we might want to have an understanding of the product, maybe some estimation of the TAM or the market size, your product roadmap as well in terms of like where you're going. And those are the main areas. I'm trying to think. We normally, it depends if it's a SaaS business. We want to see a lot around pipeline as well in terms of like what is your weighted pipeline? Do you have the right amount of pipeline coverage? Do you even have the leading indicators to get to it in terms of like your sales reps and the ramping and the quota that they're going to attain to get there? So I'm being like really specific, but there's a lot of kind of that those are the drivers. There's this important kind of background information that feeds into the overall forecast. And the more granular you can get on that, the better. A lot of VC funds have templates out there. Lightspeed has, if you Google Lightspeed SaaS template, we have a kind of financial model template for how to set up your SaaS business. We also have one for more of a consumer cohorted business. I forget what that one's called. We also have a chart called like Lightspeed spaghetti charts that shows cohorts growth. So there's a lot of information on the internet about how to set these up that funds and individuals put out there. But like a well thought out, robust data room gets down to like the core drivers, what are my marketing channels, all of that, and then extends it all the way out to the outputs.
And before you guys like start freaking out over like understanding every single little driver, do remember the context, right? Mercedes used to be a Goldman Sachs analyst. She like the reason I can relate is because I have an identical twin who also used to be a banker, and his magic trick is that when he's coaching you when he's understanding your business, he'll build a model, right? So that's what he likes to see. So not to worry when I typically need that, I don't know how to do that shit, but my brother does it. Or just find someone who does it. And then but don't freak out if you can't actually do that as a founder. How about you, Carlo? How do you feel about the data room? And I would want for you to speak a little bit too about founder due diligence, which is obviously super important. And Mercedes didn't necessarily touch upon it, but I'm sure that you guys go to like deep, like
Yeah.
great depths on that regard.
No, happy to tackle both. First, just to complement what Mercedes mentioned, fully aligned on the kind of the content piece, and just wanted to reinforce how it drives us nuts when we're dealing with the model and the formula is not there. So just think through, just putting very clearly what are the assumptions, what are the formulas, don't hard code anything into the cells. But if you step back, I think this goes for the model, which is a key component, but also how you organize your data room. So you clearly have clearly labeled folders. It's easy to navigate. It's user friendly. So in a way, I think that signals the importance that you're putting into your product, right? At the end of the day, in a funding process, which is a super important process of your company at that stage, the company is the product and you're selling it to investors in a way, right? So you wanna make sure that you have your potential customers in mind, that you're customer centric, that you have something that is intuitive, user friendly. So that in a way is a proxy for how much product driven your organization are and how much product centric. And then on the second question there on founders due diligence, I think that's the part that we spend the bulk of the time. Even when we are assessing the financial model together, we're doing working sessions on market sizing, we're talking about the vision, etc. At the end of the day, those are all excuses to really get to know you, right? How you think, how you articulate the vision, how you think about fundraising, how you think about building the team, what you understand are the core levers of the business, how you interact with the waiter in the restaurant. So we want to make sure we also have opportunities to go on in social settings to really understand, values, style. So we try to spend a lot of time with founders and assess them, and it's a two-way street, right? We're assessing them, they're assessing us. The best founders always have choices. So we also need to do our homework to be there at the top of their choices for partnering up. And obviously, we do a lot of reference calls, right? We would typically ask for folks to share with us 5 to 10 names, and those are obviously mandatory. But we'll go the extra mile to try to talk to folks that know them and they didn't share with us, because those typically tend to be more biased toward the positive aspects. And we spend a lot of time there, double clicking, understanding how they behaved in the past, et cetera, just to make sure they fall into this top 5% of people that folks have worked with in life. So.
Yeah, and I think I should provide a little bit of color into how sometimes some of those due diligence calls go. Sometimes, I don't know, Mercedes will call me or Carlo will call me, and they'll ask me to rank a founder in relation to Simon, co-founder at Rappi, Fancho, co-founder at Fruana, Juan Pablo, co-founder at Juno. And I'm like, dude, like they're like ridiculously good. It's quite hard to do that rank, but that's the bar that they go for. It's not yeah, they're like, it's not like they're okay. You're always going for stellar. And maybe you could speak to your founder due diligence, Mercedes, and how you guys go about it at Lightspeed. Or is it quite similar to what Carlo mentioned?
Yeah, definitely similar to what Carlo mentioned. I mean, the offsheet references are the most valuable, meaning the ones that you didn't give us. And so the ones that we have to go source ourselves. And we try to get, controversial opinions. It doesn't necessarily mean that we're not going to invest because we got a bad opinion, but we look for there's a lot of people who give lukewarm references. And what we're really looking for is like exceptional references. When we ask people to do kind of this ranking, or we'll ask them to say, of all the people that you've worked with in your career, what percentage do they fall into? And a lot of people will be like, top 25% for sure. And you're like, okay, but
That's not great.
where?
That's not great.
That's not great. So like, do you mean top 1%, or did you mean or do you mean top 10%? And so we'll push them and kind of ask these things to try and get feedback. And the other thing that we'll do is we'll sometimes do working sessions with founders where we go through kind of like a problem that they're working on, and ask them a bunch of questions, but we'll have a couple of different areas we're targeting. We might also be asking a lot of questions about past decisions that they've made to try and understand why they made those decisions, around things like execution intensity, around ability to think broad and on the minutia level, on the ability to kind of emotionally connect and really campaign for the company. You have to sell for fundraising, you have to sell for talent, you have to sell for the product, and do, getting a sense of that. And so we'll go through those questions and things like, for example, one time a founder told me about how they had previously had to fire one of their co-founders and the situation and how this all happened. And that can sound like controversial and bad and like, oh, they weren't able to get along. But I also was able to take it as they are able to face hard problems and make, hard decisions fast. And so that ended up being a positive in the way that this circumstance worked out. So it's a lot of the back channel references as well as the testing the decision making in the past.
That's great. That's a great view. I actually love founders that get rid of co-founders. Like maybe I shouldn't say that, but I do. I think that's a great sign. And because we want to talk a little bit about the process, I want to switch up to you, Carlo. You obviously have invested in a bunch of companies and have run many companies through the process. I want you to provide a little bit of insight into how does it feel when a founder is running like a good, tight fundraising process? Like, what does it look like from your side so that people get a little bit of a view as to how they could run a process?
Yeah. I think it clearly, we have a clear sense that they've invested into it in preparation, that they're not just doing this kind of, out of reactive, I have to fundraise, oh, this is a pain in the ass. And, so they invested the time and they're very intentional about it. And they put a lot of hours into, organizing the data room, as we said, rehearsing the pitch, really trying to articulate, how they will play, how they will win. At the end of the day, I think that's key, right? And founders also that strike us as having a very kind of proactive and collaborative approach, that we understand that they're not looking for just capital, they're also seeking for the best possible partner. So just to give you and this is we have kind of back of our minds, it's not something super explicit, but that's a test that I like to run when we have founders come and pitch us. It's always concerning when they never make a question to us. They just pitch, and answer questions. And that's kind of telling of how they might be working afterwards, because obviously we want founders that are super, high confidence, have high conviction, but at the end of the day, founders that are also looking for different points of views, right? So they want to be challenged. They want to make sure they don't have blind spots. So these guys will typically come in and make a lot of questions to us, and good questions, not just like the typical, hey, how do you guys add value to portfolio companies? More like deep, thoughtful questions. So that's, I think, what kind of separates, founders that you think like proactive, invested into preparing, see the conversation as potentially a path towards a new partnership and not just putting gas in the tank, if you will.
Thank you for that, Colin. How about you, Mercedes? What are some key things that you like to see in a founder when they're running a fundraising process from your end?
Totally agree on the asking questions. It's a little bit annoying sometimes, but I do find really good founders are like asking me a ton of questions and interviewing. I'm like, wait, I haven't heard as much about your business yet as I want to hear. But normally it's because they just have this insatiable appetite to learn, and they treat every interaction as a learning opportunity. And so I've had, founders like start the call with like, okay, how do you think about this problem? Like, this is something I'm really dealing with, and this is how the ways I've been trying to solve it, and I'm not advising everyone to do that because it can be it's really intense, and if you don't nail it perfectly, it backfires. It will really annoy people, but every once in a while that happens. And then I would say other things we're kind of looking for in the process is a lot of it comes down to being able to walk this line of vulnerability and confidence. A lot of times people are thinking that they have to present so confidently, and they don't say they don't know the answer when really that's the truth is they don't know the answer to that question. And so they fumble around to answer, and we can kind of tell they don't know exactly what they're talking about. I actually think it presents much more confidently if you're able to command an answer you don't know the answer to, by saying, well, I'm not exactly sure, but this is how I would go about figuring it out. And this might happen with like a metric or something. They ask you about a metric you've never heard of before, and you can be like, wait, just want to clarify, what is that? Oh, interesting. Okay, yes, I do use something similar to this, and this is how I think about it today, XYZ. Or you can even start doing the math in your head and be like, well, this is what I think it would be, but am I on the right track? Is this how it goes? Sometimes that's actually like it sounds scary, but that can be a confidence boosting thing for the investor. And then the other version of that is, if people are acting too confident and they're actually bluffing, especially in the process, people being like, I have a term sheet, it's coming tomorrow, you need to get in or get out by, like, we kind of can get the sense a lot of times when that's not real. And so that is really a big backfire in my mind as well.
Yeah, that's I've seen that happen a couple of times, and it definitely backfires horribly. You just reminded me that there's this kid that I've been coaching that I ended up investing, but even when I was negotiating some terms with him and he was like saying no and he was not going to take my investment, this dude got like 30 minutes of my time helping him fix but like bunch of stuff about his business. It's like really good. I'll do an intro. They always are able to learn as much as they can.
Yeah.
I want to the conversation has been super rich in terms of founders, and you highlighted, Mercedes, some non-obvious traits that you see and that you look for in super successful founders. I'd love for you to talk a little bit about that. Some non-obvious traits that you specifically look for, and I'll start with you and then with Carlo.
Yeah, I would say non-obvious, let's see, non-obvious traits we look for. Sometimes I actually think founders can be a little disagreeable, and that's okay. Like it's non-obvious because people want to be liked and they want to be likable, but sometimes founders who have a really strong opinion, but loosely held, they're open to feedback and open to inputs and data that change that opinion, are some of my favorite, and that they feel very strongly about something and almost feels like they're fighting you a little bit. And then when you say, well, actually, this is some of the data and things, to go, oh, interesting. Okay. And then they take that in, they ingest it, and you can see them kind of moving towards a new perspective. I think we always have to be really careful as investors to not over rotate on just like people who can have like an edge. Sometimes some people don't like that, but I think it's totally fine. Other stuff that is non-obvious that we look for, because the obvious stuff is like learning agility, like, execution intensity, fundraising ability. I think the other non-obvious part maybe is just like how they treat their kind of team and how they talk about their team. Some folks talk about their team in a way I like, where it's like they just are like, they're so happy that they were able to hire people smarter than them. And that's a good sign. Like, that's what we want to see. But other times people are kind of like, it's all about them, and they don't ever really mention anyone on their team. I think that's a little bit non-obvious, but that can be kind of not always a good sign.
I completely hear you. How about you, Carlo?
Yeah. Talking about kind of traits, it's funny because we try to have frameworks and go into conversations with that kind of back of our minds. But the truth is that it's much more art than science, right? And it's a lot about just pattern recognition, doing this over and over, and some kind of alarm going out there when you see someone that reminds you a lot of Simone, for instance. But having said that, I think we try to bring a little bit of discipline in that. And I use a framework called Midas, and each letter stands for a trait, right? So the first one is magnetic. So the founder needs to, draw people towards his or her vision, right? The second one is insider. So he really understands the industry he's tackling. He doesn't necessarily need to have 10 years of experience there, but at least he's done a lot of homework and understand how it works, the competitors, the value propositions, the margin schemes, etc. Then the D stands for determined, right? So we really want founders that won't take no as an answer and just keep pursuing it, resilient. Then the A is for authentic. So you don't want, ideally, you don't want founders that are just, looking for opportunities from a top-down approach, putting up kind of spreadsheets and looking at trends and what is the biggest market. You want something that's kind of more organic, bottom up, like Fancho you mentioned from Frubana. Fancho used to work for Rappi, saw the problem in the side of restaurants, and his dad on a farm, he saw the problem on the side of the farmers. It's super bottom up, super authentic, right? And then the S stands for self-aware, which I think goes a lot into what Mercedes was saying about learning, right? Folks that are, understand where their strengths are and also understand where the weaknesses are and can reach out to complement their skill sets and ask for feedback and really understand that's kind of a team sport. When you ask about more non-obvious, I think the magnetic one is the one because, folks will typically confuse it for charisma. And once founders don't have charisma, they kind of brush it off. And it's not that, it's something different that we try to capture with this magnetism. Sometimes the founder is just introspective, more calm, but for some reason, the way he articulates the vision draws, folks into buying the dream with him. And he'll need to do this for the entirety of the process, right? For the full journey. Partners, clients, customers, team, financing. So that's super important and perhaps not as obvious. And the one that I think is non-negotiable, perhaps you can compromise a little bit in one of the letters or two, but the one that I would never compromise is the determined one. Like this is not a fun ride, like a couple of years. This is going to be hard. It's going to take way longer than you think. So you need to be there for the long term. And we try to look for your background, experiences you had. That's why we also love, former athletes. We invest in a bunch of those because they typically have the discipline, the determination, and that translates very well into the business setting. And the folks you mentioned there, Rappi, and Frubana founders, they all have that, like super strong, determined folks, force of nature, right?
You just made me realize that I've been speaking a lot about another letter that is I for insane or imbalanced, but I always look for that. I think that you guys can probably speak to that because it's not like as politically correct, but I can. Like I've never seen a founder who's like top, 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 and it's actually not imbalanced or not insane, like not like
Yeah,
extreme insane, right?
missing a screw, right?
Like missing a screw, or because no one's that determined unless they're quite a
Yeah.
bit crazy. And more recently, I've I've even more so and more so I look at my investments through a lens of insanity. That's like good, like productive, right? Coping mechanisms that are hyper productive. I look for those. And one of them is like super strong determination. Another one is workaholism. But like, I'm not sure that everyone can speak to that. I sure can. Let's switch it up a little bit and talk about, with the last 5 minutes that we have, some stuff that you'd like to see more of founders when they're raising funds, like see more of, because you see a bunch of mistakes in that regard. And maybe Carlo, you can highlight what would you like to see more of founders when they come in and pitch you.
Yeah, I think assuming this is for more like a Series A,
Yeah, seriously.
yeah, I think founders that are very confident about having product market fits, and making sure you do. And there's, it's one of these disciplines that is not super, hard science, but you have ways to figure it out, like serving your customer base, looking at the cohorts, understanding retention, etc. So I'd love to see teams pitch at the Series A stage when they are confident, more confident about that, and not before. Um, I think I would love to see folks more, when on the team portion that Mercedes also alluded to, obviously the more leadership folks they already have on the team, the more talent and density of talent there, the better. But that at least they have the blueprint, right? Very clearly, what are the areas that they will need to bring A players, that they understand where the skill sets are strong today, where they're missing, and where they need to really go for it. And then I think I would include there also, doing more of the homework before meeting us, to just like we do with them, when they come pitch to us, that they also talk with founders that have worked with us or that are currently working with us, and understand why Monashees is different, right? What's the personality of Monashees? Uh, yeah, I think it goes a long way to just for us to see that these guys, invested the time and are really looking at us as a potential partner for the long, long haul, and not just the check. I think that also goes back to the point I made before about being user-centric and focusing a lot on kind of the user experience, putting yourself in the other's shoes, having empathy.
Yeah, that's you clearly highlighted that, and the way that I think about it is that the people that are most successful at fundraising, it feels like they're an investor, like they completely understand, they have a ton of empathy for what you're looking for, right? And that I think goes to the user experience. How about you, Mercedes? What would you like to see founders do more of, or perhaps less of, when they're racing from you?
I think more of is demonstrating their knowledge of what A players look like. I think this is one of the hardest things for founders to develop sometimes, is what we call like a nose for A plus quality talent. And then also identifying those people and then kind of creating the path to actually get there. I think one of the most important inputs to a startup is just how high quality of talent you can hire. And I really don't hear people talk enough about that as part of like, this is what I'm going to use the funding for. Here is the 5 candidates that are my dream candidates. If I could get, like, I'm in touch with them. If I can pay them like what they're worth, like I will be able to, get them tomorrow type of thing. And actually your brother does this a lot in terms of he's obsessed with talent, and just figuring out who's the best people to acquire it. He almost views it like a game. Like I'm constantly trying to bring the best people into my orbit. And I think that's just a orientation that's a little bit more rare. The other thing I would like to see is people coming back to us. So a lot of times we have a first pitch meeting and then we'll have an update call like 3 months, 4 months later, maybe 6 months later. Coming back to that, hopefully you took notes. I took a ton of notes on your company, when we chatted, and referencing like what it was that we had questions or concerns about during that last call. And here's all the things you did in the last 3, 4, 6 months to kind of improve upon that area of the business. It's not necessarily address what I thought was the issue, but it was probably, if you got that feedback quite a bit from different people, it was probably something real to work on. And showing that cycle of like, I took feedback, I heard it, I knew it was something I wanted to work on, and here's what I did. I think if you, get 3 of those updates in a row and the numbers continue to go up into the right, like that just gives us investors such confidence. Like, wow, this person is really taking in, like learning and then demonstrating their knowledge accumulation and moving it into actually the input of how their business operates. That's kind of rare. Like people don't really do that nearly as much as I think they could.
Yeah, the simple taking notes, following up, and then showing that you took the feedback. I think that's great, valuable feedback for founders. For me, it's been quite a learning, right? When I started out, I thought that it was all like adversarial, like give me my money, or let's go do this stuff. And the more that you mature, the more you see the partnership and the partnership and the partnership. And what you just highlighted is just a very simple way of collaborating from the get-go, even if there's not an investment in between. But guys, I wanna be very mindful of your time and respectful of your time. And I do wanna highlight once more how grateful I am, and just speaking for founders here and maybe like a couple of thousand that might be watching on YouTube. You two have done a ton for the region, Latam specifically. You bring those investments. Carlos for 18 years, Mercedes as soon as she could, right? With US Capital. So we're all super, super grateful. And hopefully, me personally, I'll continue to send you like great investments. And then a bunch of these will partner with you and we'll drive a bunch of innovation here. So thanks again for the time. And I do have a couple to send your way. So I'll do it later. Okay.
Thank
Have
you.
a great one, folks.
Thank you, and congrats on the initiative. This, the Rappi culture and what you're doing for the ecosystem, broader Latin America, it's amazing. Just keep pushing there and count on us.
This
Thank
is
you.
amazing. Totally echo what Carlos said. Thank you guys so much for your time, and don't hesitate to reach out. Email is better than LinkedIn for me.
Okay. Have a great one, folks. Folks, quick reminder, if you're raising a Series A or expect to do so over the next few months, you need to get your financials straight. And I would strongly recommend that you hire JP Donoso, the CEO and founder of Optics, to help you out in that regard. He worked at Rappi's internal team, we raised exceptional rounds with him, and he's helped dozens of world-class startups raise their rounds. So give JP a call.